All right, recording started. Thank you everybody in advance for listening or tuning in after the fact. We got Super Pro John on the phone here. All right, so I'm going to share my screen here and give you guys the, give you guys kind of the, bull bear, the standard like bull bear setups here. And I also wanted to try to just do a quick refresher on like what we had talked about last week. So last week, these are some of the charts that, the waves look a little bit messy here. So it's kind of invalidated some of these, but we did have a pretty nice wave down here. But then again, we had this crazy little news driven pump here. So that kind of it does invalidate some of these patterns, but realistically, I think it's it's like a man-made disaster. So normally the charts would kind of follow that. So that's looking at the Nasdaq here. We're still kind of tracking downwards to this this sort of this sort of like lower low. But before I go into that stuff here, let me show you the S&P. So this is one scenario that I was showing before, which is like an inverted head and shoulders. I don't think that that's really probably what we're seeing here. The markets still look a little weak. And as I mentioned to John before I started the recording, I feel like a lot of this news-driven headline stuff is because the bulls are having trouble getting past resistance. So there's been a lot of selling. It's been really difficult for them to get above. Like this turquoise line is the 200 daily moving average. So it's been really difficult for them to get above it because every time it's really sank below, it's been rejected. And you can kind of see here, we've had some pretty decent rejection as of like Thursday the 19th. It hasn't really been below a lot, but it's a significant difference from what we saw here from like like Sunday or like when futures opened here after we had that gap down from Friday. So again, I think it's all war driven, it's all oil driven. So let's not take it for what it isn't, I guess. The key thing to understand here is that in general, so before we do any bull bear setups, in general, the biggest thing that I've noticed here is that there's just general weakness across the board. I do think that we might be a little oversold, not oversold, sorry, but like I think we might be getting to the end, I think, of this first initial wave here. But I do think that when we do have a bounce, I think it's going to be very strong, and I think it'll be very quick. So if you hold some shorts, I would say a good idea is to just take that loot and scoot, and you can always reset the trade the next day. So another thing we talked about before we started the call here was taking small bites with some trades. So you don't have to. Trading a range like this is very difficult if you have 5 or if you have large positions. So let's say you buy in $100,000 or something like that. You could have a lot of this daily compounding that really hurts like leverage ETFs. But in addition, you could also do some, like if you see some good setups during the day, you could also try to like day trade it or make a weekly trade or something like that. So in general, we see weakness. Indexes that have continuously pierced this level of support. If you guys remember, we were having fun with this line before, where over the last couple of weeks the line just keeps breaking and markets keep heading lower. And typically it's not, well, not typically, that's not what you see with a strong market. So we've had to keep adjusting this line. And some people think that like technical analysis is just voodoo wizardry or whatever, but in my opinion, I think it's the only thing that really works when you have serious, or like what you have a really crazy consolidation zone with a lot of whipsaw back and forth. Their signals help, sure. AI is fine, but I think AI does not really do well yet at corrections. And I think a lot of it is because AI, some models and things like that, some data models really rely on a lot of like moving averages. Maybe some volume, something like that. But with this sort of stuff, especially with the correction, when markets aren't just going up and to the right, you really need like a human touch to kind of interpret. It's almost like, you're in battle, and you're right at the front line, and you're seeing like, price action, bulls and bears. You see a rally trying to get off, on a good start, and then bears start coming in, or you see a bunch of spikes and stuff like that. Like for example, I'll just show you guys like today, and then I'll shut up about it, and I will go and I'll show you bull bear. But you can see today, we had a lot of these spikes, and a lot of people ask me, whether it's a DM or something like that. They all say like, well, what is this? What is the purpose of this? Like we see several of these. Usually in the beginning of the morning, that's to kick it off. Like it's all about momentum. The morning trade, it's very bulls always typically buy the open. It's like buy the close, sell the open kind of thing. But when you see these sort of spikes here, this is a test of seller support, a test of seller resistance. So really what you're seeing, and I'll circle some other things here, is you see these big top wicks. So when you're trading this, and you're trying to understand who has the momentum, that's really what you want to look for, is like these really big top wicks. It's also called like a shooting star, or it could be like an inverted hammer or whatever. It doesn't really matter what it's called. Really, it's just looking at some of these top wicks that gives you a really good indication of what both buyers and sellers are trying to do. So you can also see that, excuse me. So let's go up to like 5 minutes. So 5 minutes, you can see over the last couple days here, and this applies to really like all indexes. So over the last couple days here, you've seen, yes, we had a huge pump, but then we also had now a day and a half really of consolidation. Well, this is not really a bullish pattern. It still has some bullish potential, but it doesn't necessarily have what I would consider like a really strong setup. So let me kind of flip back here to the main view. So overall, I guess I just wanted to restate here that it does look bearish overall, but I want to give bulls a fair shake here. They've been really trying. You can see the volume is incredible. We got a lot of people spend lots of money here to support an agenda. So I guess we could do. I'll do the short-term bull scenario. I think that's probably what we'll see. Let me think about it. But I just wanted to kind of level set here with you guys. So I think that we do have some sort of continuation of like what we've been seeing lately, which is just chop back and forth, and people are getting all cut up. And another thing too, I will say to support this is my handy dandy magic sector strength chart. What this chart does here is it measures how many stocks within each sector of the S&P are trading above their 20-day moving average. And as you can see here, when we have this kind of waterfall down, that just means that there's a lot of stocks in these different sectors. Like materials have been crushed, industrials like very poor trade right now. Like anything really that is sensitive to inflationary pressure is getting totally hammered right now. Anything that is, in my opinion, it's like a momentum trade. Energy, so oil, gas. I mean, you can see there's a lot of stocks that are staying above their 20-day moving average, but for good reason. You can also see something like consumer staples are down. So anyways, like when you look at all these and you see just everything kind of declining in concert, also with the index, that's good. If you see a decline without a decline in the index itself, then it's top heavy and the days are numbered before it falls again. So in the past year, you can see kind of, it comes in cycles like everything. So something like this, where you see market breadth declining over September, October, and market, the indexes just keep going up and up. That's where you start to see some more significant price declines. So you can kind of see here where it's just been going up for a while in tandem, and then all of a sudden it just drops after, like you could see like Sunday, Monday, that kind of thing, and then you get a bit of a buy up, and it just kind of goes back and forth. But the larger ones is where I really like to use this chart for. So now that we've kind of broken this big support line, we've reclaimed it, but probably not for long. So that's the main takeaway here, is that while short term I'm bullish, I just don't think we're done yet with the current pattern that we're in. So let's do some drawing. Hopefully not with a crayon this time. All right, let's kind of take it up to a higher level. So initially, we just want to kind of figure out, all right, so where's this going? The last sell-off here for the S&P, I think went pretty far, which is it's healthy. Again, we've been trading in this range for forever. It's been annoying. But you can also kind of see some other shapes that excuse me, some other shapes that get that I can kind of pick out here. One of them really is sorry, 1 second. Maybe that's a signal that I should stop talking so much. So you have these potential setups like this. It's really just like a series of ABCs, and I think this is probably this chart. This one's probably a better representation. So we talked last week about this potentially being a wave 4, but we're starting to see some interesting looking things here. Like I think we're getting to the end of this little sell-off here, or at least like the first leg down. But as I kind of mentioned before, I think that once you do hit a bottom here, you're going to get a really big, either it's going to be like a news headline or like something that actually has some meat to it, where it's going to kick off a very very strong retrace. So with that being said, right now we're just kind of trying to figure out like where we're at. So in this sort of structure here, if you're not a big Elliott wave person, usually things like this, it's called fractal, fractal in nature, meaning that patterns repeat themselves at different time periods. So daily, weekly, monthly, and hourly, per minute, whatever. You can see the same 5-wave impulses, 3-wave corrective sort of things, and also in combination with technical analysis and chart patterns. Like this is what algorithms use to trade. So they also use Fibonacci levels for retracement levels, and usually requires a human actor to turn on the buy huge button, whatever. But when we're looking at these things here, we want to also understand that once we see a certain pattern, like an ABC, so like this whole pattern started with it, then highly likely you're going to see another ABC up. But it might not make a new high, or it might make a slight new high, that kind of thing. It depends on the kind of structure, but I'll save you guys all the details from that, so I don't bore you to death. But yeah, I've been saying for a while here that I think this is the last leg down here for this particular wave. And let's try to draw this a little bit more clear. I mean, you can kind of see that each of these subsequent waves here of a smaller degree all have ABCs. And some people say, well, it's very subjective. It's you can choose different points to draw these ABCs and stuff. Yeah, that is true. That is true. However, once you start to see these at a finer grain detail, you can start to forecast this. So that's where you start to see, okay, we've got these ABCs here. They're all over the place. What is going on with this? So usually that's what I mean by fractal. Okay, so fractal is essentially chart patterns breaking down into smaller patterns that repeat themselves. And in this particular correction, I think we have gone far enough where like another sort of pattern probably won't materialize. Like if I zoom out and I take a look at this structure here, I can't really think of anything else that might fit. So it's sort of like it gives you a little bit of an edge here to understand that once you recognize a pattern, the higher probability is going to be that it continues. So to kind of get to the point with this, short term, I think that what we could see here is a potential another run up where where the bulls try to reclaim this 200 daily moving average. However, I don't think that that's going to happen right away. I think we're going to see something else. I think we'll see probably something that's a little bit more sloppy, where again, like we had this big squeeze here, and not technically, sorry, but typically those don't last long at the highs. Eventually, sellers or buyers or whoever got, I mean, if you really want the real terminology, it's like whoever got screwed wants their money back. So they're going to sell the market down to go back and get it, or they're going to make it very painful for the other side or expensive for them to keep doing what they're doing. So I think that's what's happening now. I think we are seeing something like a bearish, like an ascending wedge. And I don't know if this is going to happen tonight or tomorrow morning. I kind of think we might see something tonight where we get maybe like, if it stops here, we might see just one more kind of retrace up here. Because I think we saw maybe this is like the fourth wave today. So the next move should be up. But if that's overnight, then tomorrow we might sell in the morning. So it's kind of like short-term bullish, but this isn't something that it's such a tight range. I don't think I would trade it. I mean, like I said, it's just a mess up here. But if we do get up to this level, that means that is a test of the 200 daily moving average. And over the last couple of days when that's happened, we've seen rejections. Sometimes very strong. So like this last one we saw here, Thursday, that was pretty strong rejection that kind of came out of nowhere. So that wasn't very fun for anybody. But I guess the main takeaway here is that short term, this is sort of the bullish pattern that I expect. But that's like in the next day or two. I would say if we do see some sort of selling, and we see something like this, like kind of like a pullback like this. Here, let me measure this. But if we do see this sort of move, then I think what will happen, or what we'll see after that, is a recovery. So we did see here that like it stopped at this 0.618 level, and usually the next step down here is this 0.786. But I've been seeing these guys, kind of jam it down to 886 before. So this is always considered like the extension zone. And again, like these, Fibonacci levels on like the hourly charts, I think are pretty reliable. They're pretty good for like pivot points. Like for example, today, something that kind of gave me some confidence that, some confidence that we might see some sort of reversal is you always usually measure like peak to trough. So you can kind of see here that it's, kept bouncing off of this 0.618. And typically when you see that, you can either see a continuation upwards, but again, I don't know, this is not a done deal. This is kind of like you could see something a little bit more brief, like maybe tonight you'll see the selling, and then tomorrow morning you'll watch them buy it up. But I do think that, short term, if we don't see that, the one move, like that tiny little bullish move there, then we could see something like this, where you get a little bit more selling, and then you find some strong support. There's a headline or something that you might have some accumulation there for half a day, that kind of thing. Some sort of position building. But ultimately, I think that bulls really need some help here. So you might see some more news, more news headline driven kind of stuff. So, hey Ben.
Sorry, a few minutes late.
That's okay. So just kind of walking through the bull bear scenarios with this. So overall, to kind of just put it in a nutshell here for Ben, who's about 7 years late. No, just kidding. That's all good. Yeah, not a problem. So basically, I think if we don't see this little extension here of this bullish move, we might see another leg down here, and that I think would just be more of like a return to where things blasted off on Monday. And like I was saying before, it's people want their money back if they got squeezed. So you see this general decline throughout the next couple of days. And actually, I think a good way to show this is way back in April, to kind of show you how this typically works. So yeah, wait, no, it's November. Whoa, here we go. Sorry, I'm jumping around a lot. Go back to the dreaded days of April. Okay, here we go. So you can kind of see here, we got the same crap. You know, right around here was when the you know, the tweet came out. It's a good time to buy, right? So, but the first time that they got squeezed, if you can kind of see what happened here, you saw a ton of volume as like an answer, excuse me, as an answer to that squeeze. There was a ton of buying, but then it almost returned to, you know, the very bottom. And that I think is, you know, you see that very often when you see these big squeezes. You can see at least like a 50% retrace. So just to, you know, when you guys are doing your trading and stuff, you know, it's pretty easy to get shaken out, especially when you see a move like this. It's like, oh man, when is it going to stop? Well, I mean, you see these, you know, these tests of, you know, buy support or sell support, or sorry, sell resistance, you know, often, and then you often see these retraces because people have large positions that they want to get out of. So again, like the markets are, it's just a gentleman's game of money, you know, a gentleman's game of money tennis, you know, where they're passing them all back and forth because they all have large positions to adjust. So typically you don't see these like big crash days, you know, where they're 12%, like, you know, like Bitcoin. But you will see, you know, squeezes and things like that, where over the next couple of days, you'll see kind of a retrace down. So that's kind of what we've been seeing here. So that kind of, I guess, kind of rounds off the like the short-term bullish sort of pattern here. So let's go over, before I go, anybody have like a kind of a bullish alternative or question or anything that pertains to the bullish setups? All right, I'll assume I've explained it perfectly, like always. Laughing at my own jokes again. All right, so the bearish sort of view, yeah, as we kind of talked about before, you know, like everything's got these little, you know, all these little subsequent patterns have these, you know, smaller ABCs within them, and even though this kind of feels like the right move here, this little bearish pennant here, this one really doesn't give me the warm fuzzy vibes. So I think what you're going to see here is actually a larger ABC like this, where this might actually be a wave 2, and I think what we could see is we could see like, because it stopped at the 0.618 retrace, so you could see something like this where you get something that is the final capitulation move for the bulls. And this is just for the first leg here. So if we kind of zoom out, this is where I wanted to spend a little bit of time, just because there's a lot of questions about this. So as we've been kind of, you know, adjusting this trend line down as things have deteriorated, what I, you know, usually these longer term trend lines are what holds, it's really, in my opinion, like what holds a lot of this glue together. Or like a lot of the, you know, holds like the larger pattern together. So that's where I'll say like, hey, you know, this is a very important bifurcation point. Like you want to make sure that, you know, it's bear below and bull above, that kind of thing. And I feel like we're approaching something like that. I don't think it's all doom and gloom right now. I think if oil stays high, then yes, we are headed for another sell-off, especially if the yields keep skyrocketing. You know, we're going to have some far bigger problems than equities. So for right now, I think all we're going to do here is just take it day by day or week by week, and you know, kind of draw like what these extensions will be. So notice how like almost perfect that fits with that trend line. Doesn't it make you angry to know that some of this stuff is maybe pre-planned? So, I mean, again, I don't want to be a doomsday guy or conspiracy guy, but I do think if you have, you know, billions and billions of dollars to play with in your big banks and stuff, and your entire business depends on having a successful trading plan, then yeah, I think there's a lot of things that happen behind the, you know, closed doors. Again, gentleman's game of money tennis. So I think that you know, while we might have you know, this ABC down, and I may have said it like 17 times, like, oh yeah, you see smaller ABCs, this and that. Well, in this case, on occasion, you will see 5 waves in like a C leg down. Even though like I don't want to like spend too much time on it. But one thing you can one thing you can see here is it's just an example. Okay, so like we've got an ABC down for the first A to B leg, just for this first move down here. But you can see a pretty pronounced sort of pattern here, where you could, well, sorry, it's in like this last little leg here. You can see like some different wave counts and things. It doesn't happen very often, but usually in a finishing move, you can see like a 5-wave impulse, and usually because that's like a wave 5 of a much larger sort of ABC, or it's a wave 5 of like a much larger 5-wave impulse. So to keep it short and sweet here, also be aware that there is that law of alternation, and what I mean by that is if you have a very like kind of lazy wave 2, then highly likely you're going down, and you're going to have a sharp wave 4. So for example, you see all this consolidation right here, and if it helps, excuse me, if it helps, I strongly recommend, can't tell you what to do, but I strongly recommend drawing boxes around consolidation zones. This has helped me earlier on in my trading career when I was trying to figure out like, what is an actual like bullish confirmation kind of move? What is a bearish one? Well, you gotta kind of read the tea leaves here. Look at all these top wicks at the 2-hour mark. That's huge. If I do it at the 4 hours, this is also huge. This does not look bullish, man. I can't stress this enough. So, like, sure, when you see a bunch of bottom wicks, that means there's accumulation. But this looks like distribution to me. And I know, going long and strong sells better than short. But I got to be honest. I think, well, you can make a ton of money shorting, but also you got to be able to pivot when you have these crazy news headline driven sort of events like we had with the tariff stuff back in April. I mean, that was impacting everything until like July, really. We just had like this constant rollback of tariff stuff, and that we didn't really see the inflation happening. Well, they might have been cooking the books too, but I do sound like a conspiracy theorist. I try to stay out of the politics but if the politics relate to markets and they impact markets, then yes, it's fair game. Like, for example, Powell, he always likes to stay out of politics. We just stick to monetary policy, but you have to also understand too that politics sometimes dictates monetary policy, not by design, but by downstream impact. So price of oil goes up. Maybe the Fed was going to drop rates 0.25% this time around. Well, not with oil at $100 a barrel. All the plastics that are made from it. So you got to kind of put that in context. So the longer the Iran war drags on here, a lot of this news-driven headline stuff like does not impact the long-term outlooks for the market. Really, what's important that moves markets look at the bond market. The bond market is 10x of equities. Equities are like the ugly cousin, relative to bond traders. Those are the best in the business. So I think when you start to read the tea leaves and you see these like wicks here, and you start to see a little bit more negative news, that kind of things. Like sometimes all this stuff in a confluence together, and also I showed you guys the breadth chart earlier. You see a decline in all these sectors except for like energy. That's just a momentum trade. Yeah, I mean it's bearish. It's a bearish setup. But how long? That's the right question to ask. So while we might not see, let's say we don't really see this 5-wave down here, I think you could make the argument that really this is set up for a much stronger C leg down, and that one, in my opinion, I would give this like a, if not, okay, let's say give a little bit of wiggle room here, a couple days or something like that. I think you could see a little bit more consolidation up here as sellers continue to unload at higher prices. Bulls keep trying to get something going to get higher, but for traders like us, let's say do swing trades, day trades, something like that. The energy trade is still a good trade. It was like metals like 2 months ago, where you just had this blow up top kind of thing. But in this sort of situation, I would say I'd give this probably like a 70% probability of happening, where you'll get this last little leg down, and everybody's going to be like, oh man, like my longs are destroyed, and you're like, well, that's the point. called capitulation for a reason. So, like once you've okay, let's just say it like this: once you start trading, and let's say you're very enthusiastic about day trading, it takes you some time to kind of get the ropes and figure out, like how to not blow up your account, that kind of thing. So if you've blown up a couple accounts, like you'll know what I'm saying, where it's like you learn different lessons, and over time, the lessons you accumulate are more specific around, that doesn't look like a bullish setup to me, or like that doesn't look bearish to me, or this could go either way, maybe just stay out for a minute. And that's kind of what I'm trying to convey here, is that this one looks more like a higher confidence bearish setup, but we also have this backdrop of news-based manipulation, which is very difficult to trade. So I would say, if you're going to do options, or if you're going to, trade, like let's say levered ETFs, that kind of thing, probably what you want to do is take some smaller bites, because you could either hedge it easily, or you can get out and it's not as painful of a loss. But also have patience, where sure, you might not be swinging for the fences, and you might catch a good day where you get a good rip up or a good rip down, that kind of thing, if you're positioned the right way. But also just use some stops. But I cannot stress that this is a very kind of precarious situation here, where you can have these short squeezes that come out of nowhere and destroy anything short related. Let's say you have like Friday puts, that kind of thing. If you had Friday puts, and you took them out, like let's say Thursday last week, that kind of thing, like you got absolutely annihilated this week, and you haven't recovered at all, because the theta burn is going to kill you. But ultimately, if you're going to play like a short side, something like this, again, I can't give advice, can't recommend anything, but what I do is I typically will buy some longer dated puts, especially when we have a rally day. So for example, like even though like markets were kind of up today, like they kind of weren't, like bears were in control all day, and the VIX was still lower. So that's, when the VIX is lower, like those are less expensive puts. And I think that options are better suited for people who short the market, or just for short-term protection. Just the way that the math works, you can buy longer dated, cheaper puts for the exact same price as you can buy expensive calls for shorter term window and expecting a bounce. So I don't want to get into it right now. I'm bored everybody to death with that, but I guess what I'm saying about it is, like, if you want to hedge, that kind of thing, choose when you hedge with patience. So like today, I added some puts in the fund money account. But if you see this kind of, this little bit more of like a retrace move higher, just a little bit higher to touch this 200 daily moving average, which might come tomorrow morning, or tonight, that kind of thing. I still think that the overall direction is going to be down. There's going to be something that happens, or who knows, and that might even happen this week. But you could have the right idea, wrong timing, and that would be tragic if you had a large bet. So small bite-sized pieces, because we don't know where this is going to stop or reverse. But I do think that we will see something like this to kind of like this extension here to kind of complete this sort of move, and then I think you'll find some big support. So without further delay here, let's say we do see that, then I think we will see a larger retrace, providing, so let's say it actually does stop at this level. You probably get some sort of tweet or something. But if you look at this volume profile, you can see this pretty monster kind of heavy buy delta up here, and it's not necessarily like, when you look, excuse me, when you look longer term, you're also seeing a lot of squeezes here. So it's kind of misrepresentative. So if you look at something that's a little bit more recent, you could see here that this point of control, there's a lot of sell delta around this, like this 50% retracement level. So again, in the event that we do sell down and test this trend line, if we do get a bounce, I would expect the bounce to be a little bit more fast and furious. So something like this, where it depends. It'll probably stop at this like 50% level, and longer term, you could see a more powerful kind of sell off. So let's say in 3 or 4 weeks, the conflict in Iran is not resolved. you could see a warning shot sent to the administration here by their deep-pocketed donors, which is like, hey, wrap it up, guys. This is bad for everybody. So you could see something like this where you get this extension of the selling. So I mean, there's a couple different scenarios, and this is obviously the most bearish of them, but you could see another like a bullish scenario where it just gets bought off the ground, and we just we see a continuation of this, the same party, and we just kind of chop around, which would be most uncool. But you could definitely see this complex sort of correction develop and chop around for half a year. It would suck, but that's kind of how tops work. Tops take forever, but once they break fast. So that's kind of the really trying hard not to over talk this, but I feel like every week it's a good time to kind of refresh where things are at, from macro perspective, also from like a micro sort of intraday kind of thing, because I can see a lot of bearish price action, but I can also see that pockmarked with these crazy news-based rallies. So all right, so any questions about indexes or bull bear setups, that kind of thing? I think that probably means the most to most people. Any specific questions? If not, I'm going to assume I explained it perfectly again. All right, so just looking real quick here at the yield. This thing has been just rocketing upwards, and now its fate is kind of intertwined with oil. So what's funny right now is like the markets are still hard to trade, but we do have clear signals, and they're all kind of like masked in different indexes in different ways, and the way that they behave together. And if you've been trading for a while, you can kind of pick it out and say like, okay, this looks definitely bullish, but now we're running into a problem now for the U.S. government, where they're refinancing tons and tons and tons of debt, but they're trying to push down the low yield end of the curve, like the short term end of the curve, because that's when they're refinancing the debt, as opposed to longer term bonds, which have longer term higher interest coupons to pay. So they want to try to get this down as fast as possible, and they can't do that if oil is high. So it's kind of like you've got two options here. One is end the war quickly and yields a retreat, because inflation is no longer an issue if you have lower oil prices. So price of commodities and goods and things like that won't go up by default just because the raw materials go up. And it's the same thing with yields. So demand for loaned money goes up because people want a higher risk premium for it. And that's exactly what we're seeing here. So again, bond traders best in the business. They kind of saw this stuff coming, a mile away. And but it also kind of moves like a glacier. So I guess the only thing I'll say about it is we'll probably have some more consolidation up here, and that also probably comes in line with probably an escalation of tension somehow, some way, either through just not being able to resolve something quicker, or fast enough, where traders want it to be, because they have to move fast or else the supply chain is going to get all screwed up with oil, and it's just going to disrupt a lot of things, and they know that. So I think you can't really force things to play out. You can have short-term news headline interjections, but you can't make it stick, unless it's like a really, really big bombshell kind of thing. Usually like Fed stuff does that, like interest rate decisions, but not necessarily like short-term political things. So before I go over gold stuff, I wanted to show oil. Sorry, this chart's a mess. I was playing with this today. So oil, I think here has so we did get some pattern expansion. I think I posted that the other day. Now I think it's just kind of developing into some sort of like bear channel. So I think we'll probably see something like this, where we might, remember that little index pattern, where we can get that tiny little dip up, or a tiny little rip up there. That usually would coincide with like a small little B wave in oil like this. But then I could see, so let's say you get some more tensions. So something like this, in my opinion, this looks like a pretty, like I have some confidence in this one, where you see like an ABC like this, in a kind of, here, let me get rid of this, where you see something like this, where you get this little tap on the 0.618, but it would coincide with the last leg down for equities. And I think I was just showing that here, but what I'm looking for is a pretty clear ABC off the bottom, and I think we're getting that. And this would be, sorry, it's all the same color, but you guys can kind of see what I'm getting at with this, where this lower this lower sort of move here would be the last little sprint up, and then I think you'll get a lot of you could get a lot of selling pretty quickly if oil really went nuts. You could even see it probably go a little higher. It depends on how many insider trader bets you got. It's funny we got to bring that up. But if it goes higher, that just means a deeper cut for the indexes. So just keep your eye on that, because yields are going to follow oil or vice versa. So if you want my take on it, it's like I have a chart up of oil, how that's trading to the left and equities on the right. And usually you get a response in equities within 2 or 3 minutes of a larger move in the oil. But to me, this looks like a pretty a pretty easy kind of layup pattern here. And you can profit from it, but still you don't want to go, don't want to bet the farm, because it could be wrong. News headline trading sucks. It really does. But if nothing's going on in the market, like during the summer, like this would be a pretty, a higher probability trade, I guess you could say. Okay, any questions about oil? Because I know it's the hot topic here. Cool. Let's cover gas real quick. So gas is just making this weird little triangle within a triangle. It's like, make a decision, but the volume is absolutely abysmal. So you know what that means, though, guys. Once the volume sucks, then the response from the other side is going to be, I wouldn't say explosive, but so many puns. But you can see these sort of patterns resolve upward quickly. So if we do have this sort of run up in oil like this, you probably have some more consolidation here with gas. But if you see this run up in oil and the yields, highly likely you'll see some sort of you could see some sort of move up like this, probably pretty fast. And that's where I would target to exit any gas longs that you might have. Like I'll be exiting oil if we get something like this. There's also some support here at the 50-day moving average, and we'll probably see that tomorrow. Maybe it goes a little bit lower, but I might add some more oil. We'll see. Okay, so that's that. Let's take a quick look here at gold. Gold, I do feel like, is not looking good here, guys. So, in my opinion, well, not in my opinion, this is like a textbook kind of thing here for Elliott wave. This looks like a pretty clear 5-wave impulse, and we just saw this, pretty serious, wave 3 down. Now I think we have seen, and you guys can pick out a little ABC here, right? This is a classic 5-wave sort of pattern. And remember, we were talking about the law of alternation before. So if we had a lazy wave 2, kind of like this, more than likely wave 4 is going to be sharp. So what I mean by that is, you'll see like this sort of range here, where it's bullish above, it is bearish below. But sorry, I misspoke there. Like a wave 5 sometimes can just make a quick test and then it gets bought up. So even if it makes just like a tiny little new low, then that's something that you can you can buy the dip on, that kind of thing. But only really when you get some confirmation that it's about ready to reverse here. But what gives me confidence with this is that right now it touched this 0.382 level, and that is, like, I would say 65% of the time, that is where you see a wave 4 reversal, and then you start to see a wave 5 on the higher degree. So typically, like ABCs are corrective, and the impulse waves are sorry, well, I just said it, impulse waves. So if you did see like a 5-wave before, so yeah, you can see it in this wave 1 up here. I mean, I don't want to zoom in, but I can see it pretty clearly. So you'll probably see something like this, where you'll get a 5-wave down, And this is probably what you'll see for gold and silver here. I think you also see equities probably sell off as well at the same time. I mean, typically it doesn't happen, but gold and equities, it's all been kind of tied together, which is not typically the relationship that I would expect. At least in times when times are normal. So yeah, this is it. And then same thing for silver. So if you kind of look at this pattern here, I bet you it's really close. 0.382. What do you know? What do you know? It's almost like these guys planned this. Second time I said that today. Calendar jokes aren't funny. Okay, sorry. But yeah, you see how it gets really, really close there. And then everybody thinks, oh, it's a rally. So John, what I was saying before we started the recording here was, this is where like small bites of like shorts or longs, would be fine, because you don't know if it's gonna there is a case here where you could see, a rip down and then it kind of heads up higher, and then if you shorted the whole thing, with conviction, then you're kind of up a creek there. But still, like I think that we will get at least some sort of move down here to like 65.5 for silver, and that would be for both bull and bearish scenarios. And with gold, I think you will see 4,300 as your absolute, like, nothing's a guarantee, you guys, but I don't know. It just looks like you're just 1 inch from the rim. You just tap it in, like. So I took out a couple of shorts here for gold. I did like 2-week puts for GLD, but you can also see here that it's not super pronounced, but this does mean something. This little red blip here, that is a concentration of sell delta. So that tells me that there has been some sellers over the last, the day today, I guess you could say, who have been accumulating short positions or distributing, but I think it's just accumulating short positions and also distributing. And if I were to flip over to this chart, you could see, hold on a second. If I do this chart again, you can see, with all the crap on it, you can see that we had a little bit more selling today, just standard kind of distribution, keeping a lid on any bullish activity, and really just making the bulls pay to jam it higher. So again, anytime you see these these sort of like strong sell patterns and these big giant candles, like, that just means that things are not on easy mode anymore. So be careful. But still, you can see some sort of convergence here with metals and equities. So just to me, it kind of seems like, when you zoom out, this is a kind of a B wave or a wave 2, like we talked about before. And this is still a bearish pattern. So it is not the time to buy in size. And you can also see the same sell delta here. So I'll bet you they're connected. So, all right. So, I mean, I'm making light of it, but what else can you do? All right. So that's pretty much it. Let's see here. Let's look at SOX. SOX is if it gets higher than 350, I'd be surprised before it takes another dumperoo. Yeah, look at all that sell delta. Yeah. So if you're in like AI stocks and stuff like that, I'm also starting to see a lot more articles about doom and gloom with AI bubbles and crap like that. So it's scaring potential liquidity away from the markets. So just be aware. I actually might add some inverse stocks here to kind of increase the positions. I have a rather large position I'd like to exit. Bitcoin, this one is kind of baffling at the moment. I feel like this is the only thing, crypto is the only thing that's really recovering and accumulating. I still think it has another leg down to go, but I don't think that you're going to see. Sorry, I guess how do I put it like this? I think you will have a probably long-term low if we do have another one of those capitulation moves down, because there's been enough accumulation at this point where Like look at all this buy volume here. Like they're not going to let it drop, and you've seen a ton of this, throughout the last couple of days. So yes, you could see a lower low, and you most likely will see a lower low. But I think the buy up is going to be probably not super quick, but I think it would be a good place to accumulate around like the 52,000 level. And then you've skipped all this crap going all the way up. all this indecisiveness. All right, so Nvidia. This honestly, guys, I don't like Nvidia. It's just such a. It's like this elephant in the room with this massive market cap weight, and its only purpose in the market right now. Yeah, it generates a lot of cash, but like, how much? Like, you have to have those positive cash inflows from all these other companies, like perpetually in order to sustain this sort of growth. The only problem that you have is now all these companies their stocks are getting smashed because they've spent so much money on chips and data centers and crap. Well, they probably won't invest as much because they don't want their stock price to get, smashed. So Nvidia is going to ultimately suffer from that. And I also think that we've had so many different weekly sell signals here for Nvidia. I think that, and again, we have so much selling up here. Like whoever's buying Nvidia here, I'm sorry, but that is very dumb, very, very dumb. I don't want to talk like Trump, but it's a very stupid thing to do. You will be holding a bag, I can guarantee you. So I really don't think that there's much. I don't think there's much left to go here for Nvidia. I think that the market cap is already super high, and even if they get like a 10% dip in their earnings, they're going to be sold off big time. However, on the flip side, you get something like Tesla. I actually think Tesla has a lot more room to run up higher. I haven't chatted with Yemen about this, but I think that you might get a little bit more of a retrace here, and then I was going to exit in my short Tesla, and then I'll add some longs here because I do think you'll have some sort of counter bounce here, but I don't want to do it while like the rest of the market is selling off. But also these mega caps are used to prop up the market. So instead of buying 500 stocks, they will buy 5 stocks with 100 times the money, if that makes sense. And that's how like Tesla and Nvidia and stuff are played. It's really just a tool to manipulate the indexes. So MSTR's got the same thing as Bitcoin. Yeah, that's right. I showed you this before. So okay, so that's pretty much it. Any questions, comments, concerns? Again, I'll just assume I explained everything perfect. And
that was really good. Yeah.
Yep, did a good job.
All right, awesome. I like to hear that. Sorry, I feel like sometimes I just drone on, but honestly, like I feel like it's there's so many things that happen in the markets that from week to week they change significantly. And if you are I always feel like you do so much better when you trade if you are involved and you pay attention and you listen to the signals. And if you phone it in, you're more likely to lose stuff unless you're like a longer term investor, and then you don't really even worry about it. You just go about your life and check every 6 months. But if you trade and stuff where you can actually try to make that alpha on top of your capital, that's what's going to set you apart from from the people that don't do that. Where if you focus and you spend the time on it, you understand what the patterns look like and what they mean, what the probabilities are that this pattern is going to reverse, that kind of stuff. That's where I feel like a lot of money can be made. So, I spent a lot of time talking about bearish stuff today, and I hate being a bear. Hate it. It's unfun. Nobody likes bears, but bears make a lot of money when they time it right. So, and I don't know about you guys, but I like money. So I'd like to try to make some more money and then help you guys make some money, but without telling you what to do. So what I'd like to try to do is spend a lot of time, because you never know who's watching the whole thing and taking notes. I hope nobody does that. And I also try to spare you guys with the like and subscribe. No. If you like it, you'll be back. So, all right, guys. Any questions or anything else for we have the call here?
No.
Cool. I assume everybody's set up for success. You guys are gonna rock and roll it, make truckloads of money, and then you guys are gonna post all over the place. Like, I made truckloads of money. I need another truck. Like,
We'll try.
All right, be careful, guys. It's
Okay.
it's kind of weird stuff out here.
Thanks.
It does seem like a
Thanks a
very
lot.
chaotic, like just a chaotic market. Like it's hard
It
to
is.
Bye.
like maybe one to just sort of stay out of